Everyone to another tax exclusive, now exclusive episode 5 and our third tax exclusive episode. As always, we're going to answer your questions for this tax season just to make sure it goes as smooth as possible. Here is from our TikTok, and this individual asked, as seen on your screen, just going to read it. So they said, given how hot the real estate market has been lately, I was wondering if you could provide more information on the Principal Residence Exemption. So Deepak, the floor is yours.
So that's a loaded question. So I'm gonna try to dive as deep as possible into that as I can. And like you said, the real estate market has been absolutely crazy. You can see house prices going up like 20% in a matter of months. It seems like it's one of those penny stocks that we talk about. So absolutely crazy. But yeah, going back into the principal residence. So I'll start off by defining what a principal residence is. So a principal residence is the primary location that a person inhabits, also referred to as the principal residence, the main residence. So basically, the home that you're living inside, the home that I'm living in primarily, that's considered your principal residence. So it doesn't matter whether that's a house or an apartment or any other different type of property. Right. If it is where you primarily live, basically that's considered your principal residence. Mm-hmm. So that's a little bit about the definition of a principal residence. The principal residence exemption, though, is basically at a high level. On the individual level, let's talk about this. Let's say I went to purchase a home in Mississauga, let's say 5, 6, 7 years ago for $500,000, right? Mm-hmm. And now, let's say, due to this massive run-up in real estate, it's worth $1.5 million. That difference when I go to sell it is $1 million. So the question is, do I have to pay tax on that if I lived in that house? The answer is no. So given that I actually lived in that house for the entirety of the time, I can declare my principal residence exemption on it, and the entire gain is tax-free. So now that differs from an investment property where if I don't inhabit it, I just have it, let's say, as a rental property. So I bought the same property, let's say, for $500,000, put it on rent, never lived in there, and for the last 5, 6, 7 years, I collected rents on that, decided, okay, the house price went up significantly, let me sell it. So now I sell the same house for $1.5 million. Now all of a sudden I actually don't have the principal residence exemption on that because I actually live somewhere else. So then that's considered an investment property, and that's going to actually be taxed. So you don't get to apply a principal residence on that. One other nuance I can think of is when you have multiple properties, you can actually, if you've lived in both of them, you can argue to the CRA, okay, that was my principal residence for a certain number of years, and the other property was my principal residence for another number of years. So really, when you're strategizing how many years to allocate the principal residence exemption to each individual property that you own, like let's say you had the same 2 properties for 10 years. So you have a 10-year window basically to allocate towards property A or property B. Right. You can't allocate principal residence on both because you can't have 2 primary residences at the same time. So really what you want to do is you want to see which property you made the highest gain on. So let's say you bought both properties at $500,000 each, just hypothetically, and one went up to $1.5 million for a $1 million gain, and the other went up to $1 million for a $500,000 gain, right, over the same number of years. Obviously, you'd want to allocate your principal residence exemption to the house that went up higher in value. It gets a little bit trickier when you've acquired the properties at different points in time. Like, let's say you bought a property 10 years ago, then you bought a second property 5 years ago. When you're debating whether to or how many years to allocate the principal residence to each one, you actually have to calculate the gain per year. So $100,000 over 10. I'm just throwing numbers out here now at this point, but like if you had $1 million over 10 years, it's $100,000 gain per year. Whereas if you had $500,000 over 8 years, that's actually less than $100,000 per year. So you'd still be better off allocating it to property A, but you do it based on the dollar gain per year, because that's ultimately what you're trying to defend. Your capital gains, really, right? So I hope that's a little bit clear. If it helps, I can provide a more written out example for our viewers if that's something that they're interested in. I can also obviously feel free to just send me a message in my DMs, And I can probably walk you through a more concrete example, but I think hopefully I can provide a little bit more light on that side. And obviously, you don't have a tax background, but if something that I say doesn't make sense, obviously just point it out and I'll try to clarify.
I did have a follow-up question though. Maybe the viewer that asked this perhaps would find this useful too. So this is based on properties, right? So does this apply, like say if I have a bunch of properties throughout Canada, right? Is this based on a provincial level or a federal level? Like this?
Exemption is at the federal level.
Oh, it's at the federal level. Okay, so say if I have like properties all over Canada, right? It would apply to the one that I made the highest gain in, right?
Yeah, but again, you have to argue that it's a principal residence for a number of years. Like if you've never lived in the property, you can actually apply your principal residence to that because the CRA will deem it wasn't for residential use, it was actually for investment use. So the principal residence exemption doesn't apply for investment properties.
So you have to be living in it. You can't rent it out.
At some points in time, like you actually have to have lived in it because otherwise it's not considered a residence, right? Like if you've rented it out the entire time, that's a pure investment property and you can't apply your principal residence to that.
Do you know how long you have to live in that property? Like approximately, not to put you on the spot or anything, but like approximately how long do you have to live in a certain property for it to be eligible for this?
Well, it's eligible for the number of years that you actually stayed in that property, for example, right? Like if you lived in there for 5 years, then yeah, like you have up to 5 years. Like, okay, I can allocate this as my principal residence exemption. But obviously, there's a little bit of a gray area there that a lot of people tend to use. So it's not always black and white, but at least at the very minimum, you have to show the CRA that you actually did live there for a period of time. So if you can demonstrate that it was a principal residence that you ordinarily inhabited for a prolonged period of time, obviously not just 1 week, right? That obviously it's blatantly
right. Yeah.
Right. So like it has to be reasonable, right? So there's always the CRA applies a reasonability test for every claim that you make, right? If it's reasonable, then usually you'll be okay. But the principal residence is designed to protect you from paying tax on gains on properties that you actually lived in, right? That's the whole fundamental reason behind that exemption. So as long as you play by the rules there and ensure that you're only claiming the principal residence on properties that you've actually lived in, then that's the intention of the rule, and that's how you're supposed to be using it. So that's how I recommend going about that.
Has COVID-19 altered this rule at all in any way? Do you have any knowledge of that?
I think they're actually debating some policy changes to the principal residence exemption. I don't know the particulars to that right now, but there might be some changes coming. Obviously, this real estate housing market has gone off quite significantly, and a lot of people within Canada, especially in the GTA, aren't able to afford new homes as first-time home buyers. So I think they are looking at different policy changes to sort of cool off the housing market, but
yeah,
nothing concrete, nothing solidified yet.
Absolutely, yeah, and I hope this answered your question. Once again, any follow-up questions, feel free to ask us. And this was a great question, and thank you for this question. And Deepak, thank you for the answer. As real estate is a booming industry, right? People are looking to make investment through it. So again, great question, and thanks for the explanation, Deepak. And once again, keep sending us your questions.
Yeah, no, and again, I just want to say, like the CRA, they are actually working to help protect you, right? Because if you're living in a residence for a long period of time, they don't want you to pay a gain on that, and that's why they've used that. That's why they've created that rule, right? And obviously, you want to stay within the lines. You want to be within the merits of the Income Tax Act, and you want to respect that. So ensure that whatever you're doing, don't try to circumvent rules. Always follow the true intention of the ITA, because again, these tax laws are meant to be respected, and they're in place to protect you. The principal residence exemption is there to protect you. So obviously, use it accordingly and use it in the way that it's meant to be used. That's something I want to leave you off with. Yeah.
Yep, absolutely. Great. Thanks for that, Deepak. When is the deadline to file my taxes? And I believe, correct me if I'm wrong, Deepak, I think that's coming up. So again, I'll throw it to you, and you can address more on this.
As an individual without self-employed business income, your deadline is actually April 30th, so that's coming up.
Right.
If you are self-employed running your own business, then if you're it's either you or your spouse really that's running their own business, then you have business income, that will actually push your deadline to June 30th. But if you're a corporation, I know this might not have been your question, but I may as well add this. It's actually 6 months after year end that you actually have to file your taxes. So if you have a December 31st year end for your corporation, then the tax are due 6 months after that, so June 30th.
This individual is asking us for tips on how to get their refund back as quickly as possible. They know that they need to file their tax as soon as possible, but what other tips do we have? So Deepak?
That's a good question, especially this year because obviously the CERB benefits came out in abundance, and there's a lot of government assistance that individuals and small business owners took advantage of. So I think there is going to be a little bit of a rush towards the end of as we get close to the deadline, 30th. I think there's going to be a huge rush of volume of tax returns going through. So definitely, if you want to get your return processed sooner, then you want to make sure that you're submitting quickly and before that rush. That's one of the techniques, as you mentioned. The other one is actually submitting your tax return electronically. So most accountants actually nowadays do file electronically. They're registered e-filers. So that'll ensure that there's no delays, especially with the older generation. Some of them actually still prefer doing their paper copies of their tax returns, submitting that. That actually the CRA has said it has caused delays. So more and more, everyone's moving towards the online e-filing, and especially because of social distancing this year, I think that'll be more prevalent. So that those two in conjunction, one, getting your tax return submitted ahead of the curve, and two, making sure that it's submitted electronically. I think those two in conjunction will help you ensure that you get it processed as soon as possible, and you get your tax refund, if applicable, as soon as possible as well.
Yeah, one thing I wanted to add with e-files is that if you are switching to electronic, be aware of all the phishing scams and security implications. Is you don't want your SIN number and any of your PII, so personal identifiable information, compromised, right, to someone that you don't want it to. So this is something for more of the older generation, as Deepak mentioned. They prefer the old-fashioned way, but if they are switching over to the e-file method, right, make sure to educate them and let them know how to securely send their information to their accountant, and then so they stay safe and their SIN numbers and all that information doesn't get compromised. But moving on now to our final question. This individual asked, how do I change my address on the CRA? Correct me if I'm wrong, Deepak. If you have a CRA account, you can change your address on there directly, but I'll throw it to you for more in-depth analysis on this question.
If you've got your account set up online with the CRA, then absolutely you can log in and change your account there. If not, then you still have to contact the CRA and ensure that your address is up to date. And this ties into our earlier question that you just asked me, is how to get your tax refund as soon as possible. If you've actually changed your address and the CRA doesn't know about this, your tax refund might end up at your previous residence. And what's going to happen there is that the new residential owner isn't allowed to give that tax return to you directly. He or she must actually return it to the CRA, and then you must file to get it received to your new address. So it's going to actually cause a significant delay to that entire process. So ensure that if you have changed your address, ensure that all your information is updated, so that if you do have a tax return or a tax refund rather coming to you, that it lands in your hands as soon as possible. So definitely keep that in mind.
Absolutely, yeah. And once again, I wanted to thank everyone for sending their questions, and Deepak for answering all these questions in great detail. I hope all this information helps our viewers. And once again, if we haven't gone to your question yet, we will address it and in future episodes, as we're still going through tax season. Just a reminder that once again, the deadline to file is April 30th. So be sure you go and file your taxes as soon as possible before everyone starts rushing and is in a panic to file their taxes, right? Yeah, so that wraps up another tax exclusive episode. And as always, keep your questions coming. We appreciate all your questions. And if this information was helpful to you, please like and subscribe. Deepak, any final thoughts?
If you have any other questions and you would like to get more granular into detail, then feel free to reach out to me and I'll help you as best as I can.
Great, awesome. Thank you, everyone, and we will see you all next week in another tax exclusive. Go and file your taxes.